that period of uncertainty, which I think goes out for more than 4 weeks, what would that mean for ETF investments? Because we have seen in this recovery, in this comeback mode for the markets, this mighty rally for the markets in mid-March lows, essentially, a lot of money getting into ETFs as well. So I just want to understand, how would you be advising clients to manage their money in this product?
Yeah, so, for us at Astoria Advisors, we're strategic long-term investors. We don't invest based on, case counts going up, bird flu, swine flu. We're going to take a very, very long time horizon, and then we're going to look at macroeconomic data, fundamentals. What I would say, and if you look at our playbook, since April, we've been pretty constructive, which was very out of consensus. Now the economic data, the earnings data is really starting to inflect higher. So our out of consensus view is that, for 2021, we think it'll be a pretty good year for the stock market, because no matter who wins, we know that the Fed is going to keep interest rates, pegged at 0%. We know the Fed's going to be, keep doing quantitative easing. Both presidents are going to do infrastructure. So I think it'll be a pretty good, period for the market next year. And the reality is, we've rallied 40, 50% off the lows in March. So any sort of uncertainty around the election is just going to be more that, the market needs to take a little bit of a breather.
But John, even though that's the more optimistic long-term view, it does seem as though you are positioning in some alternatives precisely because of the risks, that volatility you were just describing in the event it takes place. What are the preferred places to park your money in that case?
So we do use alternatives to kind of hedge some of our equity risk. Our goal is to participate in the upside, but, have a little bit of a smoother experience for our portfolio. So some of the alternatives we use would be things like gold equities. There's a long short market neutral ETF, and then the merger arbitrage ETF. So some of those tickers are gold, GLD or GLDM, GDX for the gold miners, BTAL for the long short market neutral, and then MNA for the merger arb. And those 4 ETFs, have, persistently low or negative correlations to stocks. And that's key, right? Because, I see some investors put, alternatives which are risk on, and they kind of augment portfolio risk.